Hey everyone, welcome back to our channel. I hope you're all doing great today. If you're new here, don't forget to hit that subscribe button and click the bell icon so you never miss out on our helpful financial tips and tricks. Today, we're diving into a really important topic that affects everyone at some point in their lives: retirement. Specifically, we're going to explore the concept of retirement buckets or income streams. So, grab a cup of coffee, get comfy, and let's get started. Now, you might be wondering, what exactly are retirement buckets, and why should I care about them? Well, let's break it down. Retirement buckets, also known as income streams, refer to a strategy for managing your retirement savings and withdrawals in a way that can help ensure you have a steady income throughout retirement. Think of it like organizing your retirement funds into different buckets that serve different purposes. This method can help you balance your needs for income, growth, and risk management as you transition from earning a paycheck to living off your savings. So, how does this work? Let's use a simple three-bucket system as an example. You can think of these buckets as your short-term, medium-term, and long-term financial needs. Bucket 1 is your short-term bucket. This is where you keep your cash or cash-equivalent investments, like savings accounts or money market funds. The goal here is to have enough liquidity to cover your immediate needs, like living expenses for the first few years of retirement. Experts often recommend having enough in this bucket to cover 3 to 5 years' worth of expenses. This way, you won't have to worry about market fluctuations impacting your daily living needs. For example, if you anticipate needing $40,000 a year, you'd want to have somewhere between $120,000 and $200,000 in this first bucket. This ensures you have a safety net that allows you to ride out any market downturns without having to sell your investments at a loss. Moving on to bucket 2, the medium-term bucket. This bucket is typically invested in more conservative assets like bonds or balanced mutual funds. The goal here is to provide a moderate level of growth while still maintaining some level of safety. You might want to allocate funds here to cover expenses in the middle years of retirement, maybe around years 5 through 15. For instance, if you plan to withdraw another $40,000 a year from this bucket, you want to ensure it's set up to grow enough to sustain those withdrawals without depleting the principal too quickly. This might mean having somewhere around $200,000 to $400,000, depending on your expected return rates. Finally, we have bucket 3, the long-term bucket. This is where you can afford to take more risks with your investments, as you won't need this money for many years. Typically, this bucket might consist of equities or growth-oriented funds. The goal is to have this bucket grow over time, so it can provide income later in retirement. If you plan to start withdrawing from this bucket after year 15, you might have a larger sum here, say $500,000 or more, depending on your overall retirement goals. While this bucket is more volatile, it has the potential for higher returns, which can help combat inflation and ensure your purchasing power is maintained over the decades. One of the key advantages of this bucket system is that it allows you to manage risk more effectively. By having money allocated in different buckets, you're less likely to feel pressured to sell investments during a market downturn, as you'll have cash set aside for immediate needs. For example, during the 2008 financial crisis, many retirees who had all their money in the stock market faced significant losses. But those who had a diversified approach with retirement buckets were able to weather the storm more comfortably. They could rely on their short-term bucket for immediate expenses while allowing their long-term investments to recover. In summary, retirement buckets or income streams are a smart strategy to ensure you have a sustainable income throughout your retirement years. By thinking ahead and organizing your funds into short-term, medium-term, and long-term buckets, you can manage risk while still pursuing growth. This not only gives you peace of mind, but also helps you enjoy your retirement without financial stress. If you found this video helpful, please give it a thumbs up. And if you have any questions or personal experiences to share about retirement planning, drop them in the comments below. Don't forget to subscribe for more insightful content on personal finance. Thanks for watching, and until next time, plan wisely and live well.